Hi, this is Raju here from Precise Trader. I welcome you back again into this session of taking full advantage of precise trading zones. Okay, basically, I believe majority of you have attended our session. For those of you who are coming first timers, who have never attended our session, what I would suggest is, okay, if you feel anything what I'm saying is not clear, or if you feel you do not understand, okay, I suggest please ask questions so that I can clarify your doubts. Okay, and also as usual, I always keep saying that please try to make the session as interactive as possible, because I think that's the only way we can make ourselves the session interesting. At the same time, we can learn as a group. Okay, do take note for those of you who are coming first timers. Okay, do take note of the risk disclosure. This is going to be purely education. And for those of you who have already been trading, what I would suggest is always, I think you must stick to your rules at all times. Okay, by the way, is there anyone in this room who are coming first time? Okay, please let me know, if you're coming first time. And also do take note that we focus all in all about 36 crosses plus spot gold. Okay, the 36 crosses are like Euro USD, Pound USD, Dollar Yen, Swiss, Aussie, Canadian, New Zealand dollar and Singapore dollars. So any one of these crosses against each other. So, and also you must, I do not know how many of you in this room trade crosses. If you're trading crosses, in fact, there are good and bad about trading crosses, because sometimes, if you understand how it works, then you would really love it, meaning in the sense trading crosses. But sometimes you do not understand, then chances are, you may get frustrated, or you may get losing money, or I think some of you are really scared to trade crosses as well. Okay, also do take note the theory behind our approach to the market. We use price level principle, or PLP in short. Okay, we are very proud to say that this is something, is an invention which we have done, and we have been using in the market, and it works nicely most of the time. And also the theory behind, or how we get the set of numbers or the set of zones, which I'll be sharing you later on, is mainly we use Fibonacci numbers, Andrews Fitchcock, moving averages, trend channels, and Gann numbers. And I believe majority of you in this room, okay, I'm sure if you're a technical based trader, you use any one of these tools. And I do not know whether any one of you use any other tool compared to, not using this tool. And also, I'm sure, majority of us follow this Fibonacci numbers, but also you must understand that the accuracy of that usage of these tools will all depends on how well you understand and how well you use it. Because when all you need, when you want to get a Fibonacci numbers, all you need to do is, okay, you need to have like 2 points, or the most 3 points, to project a price target. So even if we put in a dozen experts into this room, and ask what is the turning point, or what is the reversal point, each one will be able to come up with different answers, because you must understand that it's just a set of we use, but of course no one can guess precisely. And you must also understand that we are working on probabilities. So when we work on probabilities, when the odds are in our favor, that's where we capitalize on it. But sometimes, when the market is not clear, then that's the time we have to be very careful, or extra careful. And I always keep saying that, trading can become easy, provided you have a proper strategy or proper game plan, And I always believe that, and I do tell all my clients, saying that whenever, we take a trade, or before you pull the trigger, or before you take an entry, all you need to do is just answer about 5 simple questions. Okay, the 5 simple questions are, I just quickly tell you, is basically, trend directions. This is the most important question which you need to ask yourself, because, and of course, it's a pretty vague question, because the trend directions can be different time frame. So you may be following even 5-10 minutes, then all you have to do is, your holding period of that trade depends on what trend directions you follow. And the second question is about, of course, your entry point. And of course, we must always stick to the trend directions. In other words, for example, if the trend is up, okay, we should be looking to buy only and not, try to look to short, when the price goes up or go, And of course, the question we need to ask ourselves is whether are we buying at dips, or are we buying at the valley, or buying at the peak, so on and so forth. So to know that, of course, we need to know how far, what is the momentum the price has been moving, and how far can the price go further in order for you to take your entry, And the third question is your stop loss. Okay, that is to protect you and the capital at all times. So I would suggest it's best for you to practice putting stop losses, because that's the a tool that is going to protect your capital and you at all times. The fourth question is, of course, your exit, or where do you plan to exit, or where do you want to book your profit. And the fifth question is, okay, what is the validity of the trade? That means how long do you plan to hold the trade? That depends on what trend directions you follow. Like, for example, if you're following an hourly trend, probably you may want to hold the trade, or you want to hold the position maybe a couple of hours, but not overnight. But on the other hand, if you're following the trend directions maybe on the daily, then probably you may want to hold your positions 1 or 2 days, especially when you know that the market has reversed or the market is going to be reversed. Always, of course, if we know, and the market is not always nice to us at all times. Sometimes what happens is, the market can be a bit tricky, or a bit noisy. Sometimes you get a noisy price movement. That's where we have to be careful. And one more thing I want to tell you is, we do sometimes, when we do a projection, we are just like a weatherman giving you a weather forecast. So all you have to do is, of course, like, for example, I'm just saying one example is, if I'm going to say that today is going to be a heavy rain, then of course if you see a cloudy or dark clouds, then definitely you know that, okay, what we say is going to happen and the probability is going to be very high. That's where you need to capitalize on it. On the other hand, if you say like today is going to be a heavy rain and you see a clear sky, then definitely you know that, okay, this is what we said, or what we expected, or what we anticipated. The market did not respond, so we have to be careful. So that's one way which you can use the report and take your trading decisions. Now let me change the screen and look at, in fact, today is the last trading day of the week, so we have to be extra careful, because always the first trading day and the last trading day, we have to be extra careful, and especially if it's going to be the last trading day and last trading day of the month. Because basically why we keep saying that we have to follow this is because that's where a lot of changes is expected, or a lot of changes can be happen, or the price can be quite noisy during that time. So looking at this today, I think there is only one data out from US, which is Reuters Michigan Consumer Sentiment, and other than that there isn't any data. Okay, in fact today the stock market started to pull back. Okay, I presume many of you know about this. Is there anyone in this room who trade index futures? Like Nikkei, DAX, any one of this index futures, I think if you have been following, you would know, right? Okay, now let's look at the session. Maybe what I will do is I'll give you one example and show you how we can use our system. I'm sure you all have a trading strategy and a game plan you follow all this while. But this is something which is a unique way of approaching the market. And it's quite easy to follow, but of course, if you understand it well, then you know what I'm talking about. But if you're not, but of course, you have to spend some time understanding it. That's what I would suggest. So now, let's look at this. Okay, this is the barometer which we use, or most of our clients use to take their trading decisions. Okay, basically what it tells you is this is the strongest, we call it the strongest, weakest barometer, and this is the best cross to trade. Okay, basically what it tells you is, in fact, I take my trading decisions based on this, and what we do or how we do is, okay, we try to capitalize on the strength or the weakness of the crosses or the currency. So this is irrespective, relative to all the crosses against each other. So you can see this US dollar, euro, pound, yen, Swiss, Aussie, so on and so forth. So when you put across, you can see against each other. So that's where it tells you the strength and weaknesses of the crosses. And of course, this one we can use on a different time frame. Like for example, let's say I put in on the daily. Okay, let's assume that what is the daily strength and weakness of the cross. In fact, today what happened was, in the morning, in fact, the dollar was quite strong against most of the crosses. And right now what has happened is euro has gaining strength or gaining a momentum. It seems like you see 1 and 2. Usually 1 is the strongest cross, 2 is the second strongest cross, and 7 and 8 are the weakest cross. So basically what we trade is, we trade the cross when we see 1 across or 2 across, 7 across and 8 across. The other crosses, like for example, you see 5 and 6. Okay, basically what is telling you is, or what is telling us is, the signals are pretty mixed. So it's best not to touch that cross at that moment or at that particular time which you are doing your analysis. So now let's say we look at on the daily, it says euro has been the strongest, Aussie has been the weakest, and in fact the yen has been the strongest. Okay, and one more thing I want to tell you about this barometer is, okay, the good and bad about this is because we do not have any zero numbers on this barometer, So what do I mean by that? That means, when the market is not trading anywhere or is trading flat, it doesn't say. So basically what you have to do is, we use a different tool to tone down or eliminate all those unwanted signals or bad signals. So as we go on, we can filter and we get the best possible trade. So now we look at a 6-hour chart. Usually we practice putting a daily chart, a 6-hour chart, 12 hours and 2 hours. These are the time belt which most of the time we use in our trading decisions. We do not use 60-minute because we believe that 60-minute is too short and it's a bit noisy. So we prefer the lowest time frame to use it as 2-hour chart. So now we look at a 6-hour chart. What it's telling us is euro is being the strongest, the Swiss is being the weakest, and the yen has been coming back to weakest. It's showing 7 against most of the crosses. But on the alert, okay, basically what we have is, we only take our trades once you see this barometer and the alert should support that barometer. Okay, meaning in the sense, okay, we always take our trade entries when the price breaks out of zone 1 or zone 2. Okay, I will show you an example. How do we look at it and how we use that zone 1 and zone 2? That means basically we buy and sell. Our buy and sell entry is dictated when the price moves out of zone 1, resistance zone 1 or 2, or support zone 1 or 2. Okay, now like for example, you see an alert saying that euro Aussie it's breached our resistance zone 1, which is 138.60. Okay, and it makes sense. Early on I think we saw that euro as being the strongest and Aussie has been the weakest. So I think the euro is dragging the euro Aussie higher. So now let's look at, since euro is being the strongest cross at this moment, okay, we need to find out using our report whether is it an opportunity for us to go long, or whether is it an opportunity to go for a short, or meaning whether is it a pullback. Okay, now let's look at the report and see what is our report says based on, give me a minute. So I believe you can see the screen. Yeah. So this is the US session updates, and our report is quite unique. Basically, how we use the report is, okay, this has got just trend directions and a set of numbers, and try not to get panic, because you see levels, and this is how we use our trades, and all these levels are going to be, or would be, like a staircase to the prices. Okay, meaning in the sense the price would move from one step to another step gradually, and of course the levels, or the levels which we pay more attention is only certain levels. I'll tell you what are the levels we need to pay attention to. Okay, now let's look at the trend directions. Okay, the trend directions on the hourly, excuse me, it says turning up while 134.95 holds. Okay, basically what it means is, okay, we expect the market to reverse up or move upwards as long as that level holds. Okay, and we use a variance of between plus minus between 3 to 5 pips as a variance. The reason being is because different brokerage firm will charge us a different spread. So that's one of the reasons. So now the question is, 134.95 is our U-turn zone 5. We call it a zone 5. We call it a U-turn zone because that's where the market reverses most of the time, especially within the day, when we use the trade during the day. So now we look at on the daily, it says turning down while 141 figure holds, which is quite far apart, meaning in the sense about 300 pips away, and this one is also about 200 pips away. So basically what we are saying is, okay, when we see turning up, okay, one of the reason, or what we should be doing is, if we have shorted early on, it's time to book the profit. That's what we should be doing. And on the other hand, if you do not hold any position, then it is time to initiate a trade or initiate a new long positions. That's what it tells us, saying that it's turning up. And our decision is always based on, I told you, is our decision will be depend on, always our buying entry would be depending on our support zone 1 and support zone 2, or resistance zone 1 and resistance zone 2. Okay, basically what it means is, okay, I can be a buyer. I can go long when the price reaches near the support zone 1 or support zone 2. That would be the least risk. And on the other hand, I can also be a seller when the price breaks below the support zone 1 or support zone 2. Okay, that depends on the market conditions and depending on the trend direction. On the other hand, the same thing vice versa, meaning in the sense I can be a buyer at the break of 136.75 or 136.95, or I can be a seller near that level when the price is trading in a range trading, or when the price is when the price is in a downtrend. Okay, now I remember I said early on, all in all, we need to answer 5 simple questions before we take the trade. The first question is, of course, the trend directions. Okay, this is turning up. So it says 134.95. So honestly, what I want to do is, I would want to go for a long or look for a buying opportunity and nothing else. I wouldn't want to go for a short. So that's the first question. So now the second question is, where do we enter? That means, where do I go long? Whether the price near support zone 1 or support zone 2, or near this level, that is 134.95. So we have 2-3 levels. So I have to decide, eventually I have to look at the chart, then that's where I decide where am I going to do my entry point. So that is my entry point. The third question is, of course, where is our exit point? The exit is, your stop loss. The third was a stop loss. So the stop loss, I'll tell you where to put in, because that depends on the entry point. Depending, we can put in 1 or 2 levels below. The fourth question is, where do we book the profit, or where do I exit? Okay, all in all, we have uh, 4 exit levels every day, okay, depending on what kind of trader you belong to. You can call yourself a conservative trader, or you can call yourself an aggressive trader. So it all depends what kind of trader you belong to. So now we have 4 levels. I'll tell you what are the 4 exit points. The 4 exit points are resistance target 1, which is 137.25, target 2, which is 137.85, target 3 is 138.55. Okay, I have 3 levels: 137.25, 137.85, 138.55, and I have one more level, which is Europe session U-turn zone, which is 138.15. Okay, maybe what I would suggest is probably you can write down all these levels, and maybe you can see and test it out and see how the trade goes on. I repeat, the levels are 137.25, 137.85, 138.15, and 138.55. So these are the 4 levels I would want to plan to exit. So my exit points I've already decided. My entry point I've yet to decide, and my stop loss I've yet to decide. And what is the holding period? You remember the 5th question is the holding period. The holding period for this trade, I would hold for another 3 hours plus, depending on, because you remember that this is a turning up, because the market did not give us a confirmation of a reversal or already turned up, so overall is turning up. So the probability is it may turn up or it may have a false break. That is up to us to decide. We go and look at the chart, then we decide. Now let's go and look at the chart and see how can we trade this cross looking at all these levels, Okay, looking at this, if I run my chart from a weekly time frame, so this is what I have been doing this for many years, and this is what I would suggest, because it's best for you to just zoom in from a higher time frame to lower time frame. At least you get the feel of the price. Where is the price heading, or where is the price expected to head? So looking at this, the market has been pretty weak this whole week. In fact, for this entire week, the market has been, it opened near the high, and the price was all the way down, and today is being the last trading day of the week. So I did say that we have to be extra careful. So overall is what this picture is telling me is, okay, this upside is going to be limited, because since this is trading well below the week open, so we have to be a bit careful. And let's say we look at on the daily. Okay, the daily is telling me that it is trading well above the open. In fact, it tried to breach the previous day low, but the market has pulled back from the low, and it's trading above the open. So basically for today, I see a lot of strength happening, so I expect the price to move higher, So this is the picture it's telling me on the daily. So now let's say we look at on the 6-hour chart. Okay, if I look at the 6-hour chart, okay, what is telling me is the price has been falling for quite some time, in fact, from 14285 all the way down to 13570, which is about 700 pips down. I think it's due for some correction or some pullback. And let us see what our oscillators tell us. Okay, if you look at the oscillators, basically what is telling us is, okay, our RSI is a bit it's oversold, and the MACD and stochastic is also oversold. Let's see. Okay, the DMI is quite wide apart, so it's holding, and in fact what the market is telling, it looks like a hammer candlestick, and in fact the price has breached just below the 200-day moving average. Okay, so basically what is telling us is the market is tested the 200-day moving average, and I feel that the market is more or less is responding to our call, meaning in the sense we expected the market to reverse. Okay, whenever we said turning up, okay, there's only four probabilities can happen. One is the market may reverse before the price, the market may reverse precisely at the price, or the market may just marginally break the level and reverse, which we call it a bear trap. So this is what usually happens most of the time. So now all we have to check is, okay, whether the market has already reversed or it is still yet to reverse. Of course we have to look at the chart and decide. Looking at this, coming back to this. So when we look at our oscillators, what has happened is our RSI is oversold. MACD is still still not given us a confirmation of a reversal. Our stochastic is also oversold. So overall this is what is giving me based on the 6-hour chart. So now let's look at the 2-hour chart. The 2-hour chart is giving us a signal, meaning in the sense the RSI is already beginning to turn. Your MACD is also beginning to turn, and stochastic is also beginning to turn. Now we look at on the 5-minute, and this is where we decide how or where is our entry point going to be. And usually most of the time what we do is this is the lowest time frame which we use, and if you want you can use maybe 3 minutes or 2 minutes, but not lower than that, because below that what we believe is going to be quite noisy, right? Okay, let me okay, now looking at this, how can we trade, or how do we know whether the market has reversed or whether the market is about to reverse? By looking at this signal, more or less I feel the price is about to reverse. Okay, it's about to reverse, but has not given us a confirmation yet. Okay, so looking at this, maybe what I can do is I can give a trading tip based on this. Okay, depending on what kind of trader you belong to. Okay, let me show you that. Let me change the screen. Okay, if you call yourself a conservative trader, then what I would want to do is, okay, I would want to patiently wait for a confirmation. It's two way which we can trade. One is really wait for the confirmation, which means that the price has to break above 137.45, 137.50. Then we can safely say that the market is more or less about to reverse. So maybe what we can do is we can do try to take a trade. In fact, conservative traders, I would want to, there's two way. One is really look to maybe it's going to be reversed. Then I may not want to miss that entry. Then probably I may want to initiate near 136. Let me see, about 136.70. This is where I would want to that means about 30-35 pips higher. Then probably I may want to put about 50 pips stop loss, then about 50 pips, 50-55 pips, depending on the market move. You can do anything above 50 pips price target, which gives us a risk reward ratio of 1:1, at the least. Because remember, the reason why we are doing this is because we believe that the market is expected to reverse, and the market has not given us a confirmation. That's one reason. Another reason is also because today is the last trading day of the week, so we want to be a bit cautious. That's one of the reasons. On the other hand, what we can do is I can also do a stop buy. That is, if I'm planning to do I feel I do not want to miss that trade, then I may want to do a stop buy once the price breaks 137.50. then probably I may want to put about 50 pips price target, and I think the price target we set was 137.85 and 138.15 and 138.55. So probably I may want to exit before 137.85 or 138.15, which gives you about 50 pips price target. Because the reason why we are doing this again is because we are expecting the market to reverse, and if we expect, I mean, if the market moves as we expected, then definitely this trade would work out well. If not, then probably this break may be a false break, then the market may test the lows, and coming to this last trading day of the week, so we have to be careful and nimble. That's the reason why we are doing in this manner. Okay, now let's look at the question and see. Okay, the question was Euro chart on the hourly and daily. I think more or less, I think the Euro I've discussed. So the Euro, what we believe is the low may have happened. Okay, this is too soon for us to conclude saying that the low has already happened. So we have to give some time for the market to give us a reply or answer to that. Till then, we have to play a cautious game. So that is my saying on this Euro USD. Okay, the next question was please review dollar Swiss on the hourly and daily. Okay, let's go back to the chart. Okay, maybe I can show you the levels for the dollar Swiss. Then you can let me show you the screen now. Excuse me. Okay, the dollar Swiss, what we believe is, okay, current price is 97.44, 43.44, and basically it's trading near the previous close. So that means the market is pretty flat compared to yesterday's close. So that's the thing, and we have to take note of that, because whether it's trading below or above the open, that gives us a comfort zone on this. The hourly trend, it says turning down while 98.80 holds. Okay, so we have our resistance zone 1 and resistance zone 2, which is 97.60. We have a resistance zone 2, which is 97.75, and we have our support zone 1, which is 97 figure, and support zone 2 as 96.85. So right now the market is trading at 97.40, which is between our resistance zone 1 and support zone 1. Okay, we call it a no man's zone, meaning in the sense the market is going to be quite noisy whenever the market moves into this no man's zone area. So as a result, we have to be careful when we are trading, when the market moves into this no man's zone area. Either the price pulls out of the zone area, then that would be a clear signal. Till then, we have to be a cautious approach. So now, looking at this, maybe anyone can tell me, maybe I would be very grateful if someone can tell me how can we trade this, looking at the chart. Later I'll show you the chart and how can we. First of all, how many of you feel that, I want to be a buyer, Is there anyone in this room who feels you want to be a buyer or you want to go for a short? Please try to answer the questions so that, at least I can go on, right? So if you feel that if you are going to be a buyer, of course, I would want to go long near 97 figure or 96.85. Remember, these are the levels I set. And if I'm going to go for a short or sell, I would want to sell or short near 97.60 or 97.75. That is the least risk, right? That's what I would want to do, right? And my price target would be 97.05, 96.50, 95.95, and 96.10. That is the U-turn zone. Okay, overall is, I repeat, 97.05, 96.50, 96.10. Okay, these are the levels whereby I want to book my profit. And on the other hand, if I'm going to long, if I go, because of course the turning down is 97.80. So we may want to plan to exit before that, which is 97.60, 97.75, 98.50. These are the levels whereby I want to plan to book my profit. Now let's look at the chart. Then we see what is best for this cross and how can we trade on this cross. Okay, looking at this on the looking at the weekly chart. Okay, the weekly is trading well above the open. Okay, opening price was 96.15. The low was 95.85, and closing was in fact today is about 97.40. And looking at this weekly trend. Okay, it's been in the sideways. That means it has been in a range trading for the last 1, 2, 3, 4. Coming to fourth week. The market has been in a range trading. So let's look at the daily. Okay, the daily, I told you that the market is trading near the previous day open, and in fact is trying to pull back below the open, right? So this is what is telling us, saying that the bears are gaining strength. So overall is I should be looking to go for a short. I would be looking to short on this market. So looking at the 6-hour chart, okay, it's trading above the open. The opening was 97.30, and it is having its pullback near the open